Right now, gold is trading back above at $2,025 per ounce. Oil is trading back above 78 US dollars per barrel. Platinum is finally back sub $900 per ounce. And we have seen over a 10% breakout with palladium just in the last week. So far this week with our clients at the Gold and Silver Club, we have banked 1,280 points profit. This is across both gold and also palladium positions. So as you know, every one lot contract that you would be trading, that's $12,800 of profit. Every 10 lot contract you'd be trading, that's $128,000 of profit. This comes off the back of the trade opportunity we mentioned to you last week, which was the Valentine's rally, which played out to an absolute T. Last week, gold, massive buy opportunity to be buying it underneath 2,000 US dollars per ounce. Right now it's trading back above $2,025 per ounce. Over a 400-point breakout just within the last week. Palladium has been the real star here. The low last week was 850 US dollars per ounce. This week we saw palladium prices break out back to 1,000 US dollars per ounce. We've seen over a 1,500 point breakout in the last week from low to high. Now this comes off the back of hedge funds and money managers being the most short they have on palladium in over a decade. And with that, we've seen a massive squeeze to the upside in the last week, over a 10% breakout here on palladium. So I hope many of you capitalized on that. We really banged the drum with you last week. Palladium was a massive buy opportunity. The question was which would get to $1,000 per ounce faster, platinum or palladium? So we have our answer. It has been palladium here. In fact, last week, platinum and palladium prices, they reached parity, both breaking back below $900 per ounce. And right now, we yet again have an opportunity here on platinum. It has dipped back below $900 per ounce. Alongside that, of course, we've continued to make sure we've locked in profits here on the breakout and strength that we've seen on gold over the course of this week. Gold and palladium have certainly been leading, and we've also seen big opportunities here on oil to bank further profits on the breakout to 78 US dollars per barrel. Just a week and a half ago, oil prices, they were trading back down towards $71 per barrel. What we've observed as well, with the breakout to the upside, this has shaken out many hedge fund and money manager positions, and they've not jumped back in the trade since the break back down towards 71 US dollars per barrel. And then we've subsequently seen an impulse move higher, over a 700-point breakout just within the last couple of weeks, and the potential for oil to continue and break back above 80 US dollars per barrel in the coming days. It's definitely a position that we want to keep within the portfolio here, being long crude oil. As I mentioned, big opportunities over this week to load up further positions on platinum. We've already been able to bank significant profits across palladium and gold over the course of this week. And this has been further accelerated later in the session on Wednesday after the release of the minutes of the FOMC, which again have stated that they're not in a position to cut rates. In fact, it's been pushed out all the way to June 2024 is now the expectation for the first rate cut. And with that, we immediately saw commodities respond, oil leading the way, but we've also seen a surge here in gold and palladium prices later on in the session. So again, over the course of this week, back-to-back opportunities for you to capitalize on. If you're not making money in commodities right now, you absolutely should be. We've talked you through multiple opportunities over the course of the last week here. And again, we're in a position where we're just banking on strength here, capitalizing on the recent dips on platinum this week as well, and making sure to maximize profits from the breakouts on gold and palladium. Again, this is where you want to be utilizing a professional, research-driven approach to the market. Definitely ditch technical analysis. It's the most basic level of trading you will be taught. It's what every single new trader that enter the markets, they're educated on technical analysis. There's absolutely no edge on this. You have to get off base level understanding of the markets here and really compound your knowledge set to incorporate data, statistics, market intelligence. Further align that with the capital flows in the market, the intermarket correlations, the ratios, further compound that with the macroeconomics, the fundamentals, the geopolitics, then of course looking at the real-time data-driven cycle on the daily, weekly, monthly and quarterly for each commodity, and then further compound that with how the hedge funds, money managers, the banks, the institutions, how they're all positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.